Welcome to Academic Gain Tutorials. In this video, we will look into the differences between comparative financial statements and common-size financial statements. Comparative financial statements present financial data for two or more accounting periods side by side, enabling users to analyze trends, identify changes, and assess performance over time. These statements typically include the income statement, balance sheet, and statement of cash flows, allowing for horizontal analysis by comparing corresponding line items across periods. On the other hand, common-size financial statements display each line item as a percentage of a base figure, allowing for easy comparison between companies of different sizes or across different time periods. This standardization helps in analyzing a company's financial structure and performance by highlighting relationships between different items and identifying trends. So, let's look into the basic differences between comparative financial statements and common-size financial statements in a tabular form. Difference number 1. A comparative financial statement shows financial performance over multiple periods, whereas a common-size financial statement presents financial data as percentages of a base value for one period. Number 2. Comparative financial statements use horizontal analysis, whereas common-size financial statements use vertical analysis. Number 3. The main purpose of comparative statements is to identify trends and make time-based comparisons, whereas common-size statements are aimed at analyzing internal structure and presenting information to stakeholders. Number 4. Comparative statements show both absolute figures and percentages, whereas common-size statements use only percentages. Number 5. Comparative analysis spans across multiple years, whereas common-size analysis focuses on one accounting period. Number 6. Comparative statements are usually used by internal management and analysts, whereas common-size statements are more useful for external stakeholders. Number 7. The focus of comparative statements is on growth and change, whereas common-size statements focus on proportional relationships within the same period. Number 8. Comparative statements are ideal for time series evaluation, whereas common-size statements are more suitable for cross-sectional evaluation. Number 9. An example of a comparative statement is showing revenue growth from 2023 to 2024, whereas a common-size example is expressing 2024 revenue as 70% of total income. And difference number 10. Comparative statements present data using both numerical values and percentage changes. On the other hand, common-size statements convert all data into percentage terms only. So, these are the differences between comparative financial statements and common-size financial statements. If this lecture was helpful, give it a thumbs up and subscribe to the channel. Thank you.